Welcome back to the channel. We brought you the today November 16, 2023 info. I will announce the topic first. Biden and Xi Jinping holding their first in-person meeting in over a year. Major U.S. airlines canceling thousands of flights due to staffing shortages. Gas prices continue to rise across the U.S. U.S. stocks fall sharply as recession fears grow. Let's move on to the detailed news. Historic in-person meeting between President Biden and President Xi Jinping signals potential for improved U.S.-China relations. On a momentous Wednesday, U.S. President Joe Biden and Chinese President Xi Jinping convened for their first face-to-face meeting in over a year, marking a significant milestone in the intricate relationship between the two global powerhouses. Nestled within the serene environs of Filoli Estate, a picturesque country retreat located approximately 25 miles, 40 kilometers, south of San Francisco, the gathering epitomized the gravity of the occasion. The meeting commenced with a candid and constructive dialogue, delving into a wide array of bilateral and global issues that have tested the bonds between the United States and China. President Biden and President Xi engaged in an earnest exchange, exploring areas of potential cooperation while also expressing their perspectives on points of divergence. Foremost among the outcomes of this historic encounter was a mutual agreement to reinstate military-to-military communication, a significant breakthrough following the suspension of such channels subsequent to the controversial visit of then-House Speaker Nancy Pelosi to Taiwan in August 2022. This development reflects a willingness on both sides to re-establish crucial lines of dialogue and foster an environment of enhanced trust and transparency. Recognizing the urgency of combating the fentanyl crisis gripping the United States, President Biden and President Xi committed to collaborative efforts in tackling the menace of illicit drugs. Their shared determination to address this pressing issue underscores a shared commitment to prioritize the well-being and safety of their respective citizens. In a resolute display of their commitment to stability and openness in the Indo-Pacific region, the two leaders emphatically reaffirmed their dedication to maintaining peace and prosperity. The importance of managing the competition between the United States and China responsibly was also a focal point of their discussions, underscoring the recognition that a balanced approach is essential for the overall stability of the global order. While this historic meeting offers a glimmer of hope for improved relations, it is important to acknowledge that significant challenges lie ahead. The complexities of the United States-China relationship demand persistent efforts and diligent diplomacy to bridge their differences on key issues. As such, the long-term trajectory of this pivotal relationship remains uncertain. In conclusion, the first-ever in-person meeting between President Biden and President Xi Jinping after a year-long hiatus signifies a significant milestone in the intricate dynamics between the United States and China. The resumption of military communication, joint commitment to combat drug-related crises, and the reiteration of shared goals for stability in the Indo-Pacific region all contribute to a cautiously optimistic outlook for the future. However, the road ahead remains arduous, and the ability of both nations to overcome their divergences will shape the course of international relations in the coming years. In other news, ongoing staffing shortages plague major U.S. airlines, prompting thousands of flight cancellations. In a persistent predicament, major U.S. airlines are grappling with staffing shortages that have led to a wave of flight cancellations, causing significant disruptions to travel plans. According to FlightAware, since the advent of 2023, U.S. airlines have been forced to cancel an astonishing 2.2 million flights, a considerable surge compared to the pre-pandemic era when approximately 1 million flights were canceled annually. The confluence of multiple factors has contributed to these alarming staffing shortages, which include early retirements. Amidst the backdrop of the pandemic, numerous airline employees opted for early retirement packages, presenting airlines with the arduous challenge of finding qualified replacements. Consequently, the industry is contending with a scarcity of skilled personnel, exacerbating the strain on their operational capacities. Escalating travel demand. As individuals yearn to embark on long-awaited vacations and reunite with loved ones after enduring restrictions during the pandemic, travel demand has surged to unprecedented levels. This surge has placed a formidable burden on airlines, further exacerbating the existing staffing challenges. Pilot shortage. The United States, in particular, is grappling with a global scarcity of pilots, stemming from multifaceted reasons. The high cost associated with pilot training and the demanding work hours imposed on pilots are among the factors contributing to this critical shortage. Travelers have borne the brunt of these staffing shortages, grappling with extensive delays, frustrating cancellations, and soaring fares. In response to this crisis, airlines have initiated measures to address the staffing deficiencies. These efforts include enticing prospective employees with hiring bonuses and bolstering their training capacities to groom new talent. However, the intricacies and magnitude of the problem suggest that the airline industry will continue to grapple with these staffing challenges for the foreseeable future. As the travel landscape evolves and the world emerges from the throes of the pandemic, the need for robust and resilient staffing solutions becomes paramount. The industry must navigate this turbulent period with unwavering determination, striking a delicate balance between meeting escalating travel demand and ensuring the highest standards of customer service and safety. In conclusion, major U.S. airlines find themselves ensnared in an enduring staffing crisis, precipitated by a perfect storm of early retirements, surging travel demand, and a global shortage of pilots. This dire situation has led to an alarming number of flight cancellations, leaving travelers to contend with mounting frustrations and disruptions. While airlines strive to mitigate the impact by implementing proactive measures, the path towards a comprehensive resolution remains uncertain. As the industry grapples with this formidable challenge, the resilience and adaptability of major U.S. airlines will be rigorously tested, ultimately shaping the future of air travel in the post-pandemic era. Let's move on to the other info. Gas prices surge nationwide amidst global factors and increased demand. Gas prices in the United States continue their upward trajectory, posing financial burdens on consumers across the nation. According to the latest data from AAA, the national average price for a gallon of regular gasoline stands at $3.345 as of November 15, 2023. Although a decline from the staggering peak of $5.016 per gallon witnessed in June 2022, current prices remain markedly higher compared to a year ago, when the national average stood at $3.759 per gallon. Several interconnected factors have contributed to the persistent surge in gas prices, including the war in Ukraine. The ongoing conflict in Ukraine has dealt a blow to global oil supplies, leading to a surge in crude oil prices. As tensions persist, the geopolitical landscape casts a shadow on stability, exerting upward pressure on gas prices. Increased demand for oil. The global economy's resurgent recovery from the depths of the pandemic has sparked a surge in demand for oil. With industries and travel returning to pre-pandemic levels, the appetite for energy resources has intensified, further driving up gas prices. Reduced refining capacity. Over the past few years, the United States has experienced a decline in its refining capacity. This reduction has created challenges in meeting the escalating demand for gasoline, contributing to the current supply-demand imbalance. The duration of elevated gas prices remains uncertain, leaving consumers and industry experts alike in a state of anticipation. The trajectory of prices will depend on various factors, including the resolution of the conflict in Ukraine and the future trajectory of global oil demand. Should the conflict persist or demand for oil continue its ascent, experts caution that gas prices may continue their upward trend. Amidst this challenging landscape, consumers are left to grapple with the financial strain inflicted by rising gas prices. As individuals and businesses navigate the aftermath of the pandemic, the burden of high fuel costs poses additional challenges to economic recovery and personal budgets. It is imperative to closely monitor the developments in global geopolitics, the energy sector, and the evolving demands of the post-pandemic world. As the nation seeks stability and equilibrium in gas prices, policymakers, industry stakeholders, and consumers must collaborate to explore sustainable solutions and mitigate the impact of fluctuating fuel costs. In conclusion, gas prices persistently rise across the United States, driven by a multitude of factors including geopolitical tensions, increased oil demand, and reduced refining capacities. As consumers grapple with the financial implications, the duration of these elevated prices remains uncertain. Continued vigilance and proactive measures are necessary to navigate the complex dynamics of the energy market, striving for stability and ensuring a resilient economy for all. In other news, U.S. stock market plummets amid mounting recession concerns. The U.S. stock market witnessed a sharp decline on Thursday, November 15, 2023, as recession fears gripped investors, sending shockwaves across major indices. The S&P 500 index experienced a staggering 2.49% drop, while the Dow Jones Industrial Average sank by 2.25%, and the Nasdaq Composite tumbled by 3.23%. Notably, this marked the largest one-day percentage drop for the S&P and Nasdaq since November 2, 2022, and the largest for the Dow since September 13, 2022. The precipitous sell-off was triggered by a confluence of factors that have rattled investor confidence, including fears of an impending recession. Heightened concerns are mounting among investors regarding the potential impact of the Federal Reserve's aggressive interest rate hikes on the U.S. economy. Worries of an economic downturn have fueled anxiety and prompted a wave of selling. Disappointing corporate earnings. In recent weeks, a series of lackluster earnings reports from several companies have further exacerbated investor concerns. Lackluster financial performance has contributed to the prevailing market unease. Global economic uncertainty, the war in Ukraine, soaring energy prices, and persistent supply chain disruptions have cast a cloud of uncertainty over the global economy. These factors, combined with other geopolitical tensions, have amplified investor apprehension and weighed heavily on market sentiment. The significant stock market sell-off serves as a clear indication of the mounting anxiety pervading investors' outlook on the economy. The duration of market volatility remains uncertain, but investors should brace themselves for further turbulence in the weeks and months ahead. Key details regarding the market sell-off are as follows. The S&P 500 closed at 3,895.75, marking its lowest level since October 4, 2022. The Dow Jones Industrial Average closed at 33,202.22, reaching its lowest level since November 11, 2022. The Nasdaq Composite closed at 10,810.53, touching its lowest level since September 23, 2022. Experts offer divergent perspectives on the outlook for the stock market. Some analysts view the recent sell-off as a necessary correction in an overheated market and anticipate a rebound in stock prices over time. Conversely, other analysts express greater concern about the looming risk of a recession and suggest the market could continue to experience downward pressure in the short term. Given these varying viewpoints, investors are advised to carefully evaluate their risk tolerance and investment objectives before making any portfolio adjustments. As the market landscape evolves, it is crucial for investors to stay informed, closely monitor economic indicators, and seek guidance from financial professionals. Navigating the volatility and uncertainties of the stock market requires prudent decision-making and a long-term perspective to weather potential storms and capitalize on future opportunities. In conclusion, the U.S. stock market experienced a significant downturn fueled by mounting recession fears, lackluster corporate earnings, and global economic uncertainties. The severity of the sell-off underscores the prevailing unease among investors, and the duration of market volatility remains uncertain. Investors must remain vigilant, exercise caution, and align their investment strategies with their individual risk profiles to navigate the complex and ever-changing market environment.